I'm Mark Gagan and you're listening to the Voice of Insurance podcast, produced in association with Advantage Go, enabling enterprise-scale underwriting through a single pane of glass. Today's episode is a really enjoyable two-hander. After over 20 years running the IUA, or the International Underwriting Association to spell it out in full, Dave Matcham has just passed his CEO role over to Chris Jones. So this episode serves a double mission. The first is to mark the extraordinary career of Dave Matcham, the London market's longest-serving CEO, and someone who has helped guide the market through more than 20 years of change. With Dave, we look back on some of the most significant milestones and sometimes tumultuous events shaping a lifetime of service to the market. Then we'll bring everything up to date as Chris and Dave outline the London company market trade body's agenda on all the most pressing issues of the day. Running a trade body is often a thankless and unglamorous task, with a huge amount of work going on behind the scenes to make sure the market functions as it should. Dave has been a tireless servant for his membership and the broader London market, and Chris has big shoes to fill. Dave has always been one of the most knowledgeable and approachable senior figures in the market, with a straightforward, no-nonsense approach to business. From this meeting, Chris is continuing in that mould. So if you want a sense of how international insurers' relationship with the UK regulators is developing, where market process reform is heading, and how the market is dealing with issues such as the application of AI and the policing of non-financial misconduct, please listen on. Dave and Chris are well-rounded, level-headed, and very often light-hearted company, and the time will fly by. Enjoy the podcast. Dave and Chris, welcome to the Voice of Insurance.
Hello, Mark. Great to be here.
Hi, Mark. Great to be here also.
Well, Dave, this is interesting. It's really great to have, how do we describe you, the former CEO of the IUA at the moment?
Definitely former.
Now former.
From the 1st of May. I class myself as a consultant until I formally leave the IUA at the end of July.
So you're the former CEO of the IUA and you're handing over to Chris, who's obviously now the current CEO of the IUA. Dave, I think it would be very hard for anyone not to have known you, but it would be really interesting to... I always ask everyone how they got into insurance and to tell us a bit about their careers before we get going. How did you get into insurance and how did you end up in position at the IUA? And then also, you've been there for a very, very long time. We were having a conversation just before I hit record. I would say you're certainly, of any kind of public body in the London market, any trade body, you must be the longest serving of anybody I've known.
I think you're right, Mark. I was the longest serving CEO in a continuing fashion. I may not be the longest serving member of staff of a trader body because some have quite a good longevity in that space. For me, it was really about who within my town of Folkestone might employ me at the tender age of 18 with 2 modest A levels. And luckily for us, and very luckily for me, as it turned out, the Orion, the Victory and the ILU had all moved their London back offices to Folkestone in the 60s. And so as a grammar school boy, you sort of knew if you applied to one of them, you were reasonably confident you'd get a job. And that's how it happened for me. So I didn't want to go to university. I wanted to play a lot of sport and work at the same time because I was a very keen cricketer at the time. So I got a job at the ILU, found myself in the aviation department, which little did I know at the time was part of the London market. You really didn't know you were part of the London market until you started to understand the industry fully. And the way I understood the industry in the 80s was to do my CII exams, which got me noticed by what you might call the head office, the ILU head office in London. And it was in 1988, 2 colleagues of mine got promoted to run the aviation and the marine department. I found myself in the proportional treaty department where not a lot happens quickly, even these days, if you talk about the blueprint. And I was the deputy to a lady who wasn't going to retire, whereas my colleagues had got the job because of retirement. So I found myself in the wrong place at the right time, ironically, and I was asked to come to London. And this was a big, big move for me that I don't think I would have done voluntarily, because it meant I was worse off because I had to pay a train fare and I had a 2.5-hour commute each way on a nice slow line from Folkestone to London. But I was put in what was called the administration department of the ILU, which ostensibly was to run the joint marine committees. So not only was I going to London, I was put in a department that I'd never worked in. I'd never worked in marine. I'd done aviation and proportional treaty. So that was sort of character building in itself. But that then put me right in the middle of the London insurance market, working with the biggest brains and entrepreneurs of that day, which you may remember yourself, of course. And then various events happened in that next 5 to 10 years, including the whole Lloyd's R&R situation.
So we're talking about late 80s, early 90s.
We're talking 88 onwards, really. The first big thing I remember dealing with was Piper Alpha. That was the first big loss. But then Hurricane Andrew soon after. Anything that was big from a maritime perspective was one of the centres of my attention then. I was fortunate in 93 to be promoted to be a director of the ILU. And that then, and people will laugh if they hear this and know me well, put me in charge of all the operational activities of the ILU, including, for example, rolling out its first computers, which...
I would have assumed they had computers before 1988.
No, they didn't. We did not have computers. We had a typing pool and we had a dispatch department, a photocopy department, and a whole series of people who walked circulars around the market every day, including minutes of joint hull meetings or these things called consult the lead, respect the lead, where if a fleet of vessels was due for renewal, you had to tell the market that the leaders were the following so they could be consulted on the terms of that renewal.
I remember there was a lot of analogue then. I remember I started as a broker in 1992. I remember the NMA clauses used to come through by post.
Yep.
They had to go and put them in the clause book to say, this is replacing the old clause, whatever it was.
Every one of our member companies had a pigeonhole in the barrier.
Yes, I do remember, yes.
So people would come to the barrier to collect their mail, or it would be delivered to the boxes. One of the things I remember vividly was being secretary of the Joint War Committee, chaired by Stephen Merritt.
Yes.
And he wrote a letter to me once about the Chinese war clauses saying, "Dear Mr. Matcham, thank you for your letter of so-and-so. I note it contains a non-sequitur. Yours sincerely, S.R. Merritt." I did not know what he meant. I genuinely didn't.
The IUA didn't quite exist then. The IUA was the Institute of London Underwriters?
Institute of London Underwriters.
So it was effectively, for any layperson out there, would be the company version of the marine aviation transport market.
It was the company version of the Lloyd's Marine and Aviation Transport market.
Yeah.
Because we had parental guarantees in lieu of a central fund that Lloyd's would have.
Yeah.
So in theory, no claim would go unpaid.
Yeah.
That was the theory.
So you had a change of security at least. There was something of an exchange about what the ILU was.
Yes.
And then around that time, obviously, it was Lerma for the non-marine company market. And then the ILU and Lerma merged.
Yes. So around about 1997, it was clear that two company market trade associations was one too many, effectively. Common membership, common issues, and there were even circumstances where we disagreed with each other, which was crazy. We had members, the same members, disagreeing with each other. So inevitably, the merger occurred. That was on the 31st of December, 1998. IUA was formed. Lerma effectively changed its name to IUA. Mary-Louise Rossi was the first chief executive, and I was her deputy.
And it became, was it the London Processing Centre, wasn't it?
No, you're going to confuse with bureau mergers, which are more than trade association mergers. The London Processing Centre was a merger of the Lerma and ILU processing centres.
Right, okay.
And the exchanging was a merger of the LPC and the Lloyd's Policy Signing Office in 2001.
It all happened so quickly. It happened in a bit of a blur. So when Mary-Louise Rossi stepped down, you took over. When was that?
So that was in 1st of April 2005. The years leading up to that, you could see changes to the association happening that we weren't probably as a secretariat responding to adequately. I was actually asked by the then chairman, Tony Mednick, literally called into his office and asked, "We would like you to become the CEO." So crazily to think there was no formal process or anything. In fact, if you go back in time, in all the positions I've had in this market, I've had one interview, and that was in 1980.
Probably wouldn't be able to happen again.
Impossible.
It wasn't like that for you, was it, Chris?
No, it absolutely wasn't. And
You've had 27 rounds.
Yeah, I'm now a little bit disappointed, Dave, having no interviews or one interview to get his role. He put me through the process to get the role I've got now. So now I went through what would be termed a robust process, appraisal process.
Yeah. Well, Dave, so 20 years in the role, how did everything evolve?
Well, so go back to 2005. That was the beginnings of what we called market reform.
Yeah.
Now called market modernization or digital transformation. It was still very much in the aftermath of 9/11, 2001, obviously. And let's talk about that in a way, because that would be one of the more significant events of my career, not as CEO. We were, as an IUA, we wanted to be positioned more on the market association side, the technical side of the market, which there was a clear demand for, and of course goes to the heart of what our members do. The lobbying activity of IUA had been perhaps arguably the most important priority in the 10 years hence. Now, you can see some of that as a hangover, especially from Lerma, because of things like the creation of the EU. There was a lot of lobbying for cross-market trading and the passport system. I get that. And then the reinsurance directive, which, to be fair, was one of Mary Louise's successes in her time as CEO. But we were moving more into this technical and technological space for the market. I think that was probably the beginning of the recognition that London could not be complacent against other markets.
I suppose the fruit of 9/11 from a regulatory perspective, from the UK regulatory, was that challenge from the FSA, as it was then, for contract certainty. That's what everyone was working towards.
John Tyner's quote was, "No longer will we have deal now, detail later." That was the quote. So the contract certainty protocol was born. You're right. But more than that, in a way, risk changed completely after 9/11. I remember the aviators saying we did not envisage planes being used as guided missiles into tall buildings.
Yeah.
So risk changed completely. Regulation changed. The market changed. Underwriting discipline. Suddenly, it just changed, to my mind, after that event. I regard that as the most significant event in my career.
Was that one of the worst days? Or?
Yes, it was. I mean, everyone remembers where they were, if they were old enough. And I remember where I was. I was lucky enough that day to be playing golf at Swinley Forest for the Insurance Golf Society of London. And I was with one of the aviation leaders. We got into the clubhouse at 2:00 and it was all over the telly. And he rushed back into the city straight away because he knew there was a crisis imminent. Aviation hull insurers had given notice to cancel. War insurers are given notice to cancel. So airlines couldn't fly without renegotiated terms. And that became a very, very dramatic 3 or 4 day period of my life because I ran the aviation committee then.
Yes.
And I was in the middle, Chris, I think, had just joined by then. And I was in the middle of these market discussions to renegotiate that cover. Well, that was an amazing experience. It really was. It was also my first experience of dealing with mainstream media, because there was a hell of a lot of press to deal with. Mary Louise seemed to do the TV. I seemed to have the face for radio. So I did the radio. So I was on Radio 4, Radio 5, etc. And I can remember coming home and my family saying, "I heard you on the radio today."
Well, nothing changes, Dave. There's no video accompanying this podcast. We have a picture on the thumbnail, but that's it. We're staying fully audio.
Exactly.
Thank you.
Yeah. So there you go. I've continued through 20 odd years to have the face for radio.
What would you say was your best day? Your best day?
Ooh, my best day. To be called into Tony's office to say you're going to be the chief executive next month, that was pretty significant, as you can imagine, because I could sort of see it coming, but didn't know there was a plan behind the scenes for it. Okay, so another good day. Fast forward to 2017. It was a big story in Insurance Day at the time, and other trade press, I'm sure, when one certain Donald J. Trump signed the covered agreement. So that's a saga in itself, but for decades before, if you wrote US treaty business and there was a loss, you had to post 100% collateral for that loss. 9/11 was a huge moment for US treaty reinsurers, meaning that in effect, we were able to begin our negotiations with US regulators to reduce that collateral burden, don't have trapped capital, don't pay unnecessary fees for letters of credit, etc. And it was in 2017 that Donald Trump signed the covered agreement. And we really weren't sure if he would, because the early year of his first term was not necessarily pro-international affairs.
No, and certainly his second term hasn't been either.
No. I don't see any signs of him rescinding that agreement now because it's now fully in place.
But I think it'd be very hard to get, I think once things go a certain direction, it's very hard to put them the other way and then knowing exactly what the consequences would be, i.e. increased costs on insurance for no particularly good reason.
There have been many highlights, clearly. As IUA, I've lived every moment of IUA's existence, I guess. And to be able to celebrate the 10th anniversary, the 20th anniversary, and then the 25th anniversary in lovely settings with our members around us. We now have a membership that's double what it used to be. They were all high points, definitely.
The role of the IUA is that over that time, it was less lobbying, more technical.
There was this change of emphasis, and now I'd say we're very much a three-legged stool. We have a hard and fast lobbying team that's vital with the new changes within PRA, FCA, and internationally. We're clearly all over the blueprint and digital transformation, and the technical underwriting activities have gone from strength to strength. Can't remember the precise number, but it's well over 1,200 people sit on our underwriting committees from 80 members. They're big, small, some MGAs, some massive global companies, some monoliners, broad church of members. And that'll be one of Chris's challenges in the future, to keep them all engaged.
Yeah, what's your main advice for him?
Well, Chris knows this. I say it almost weekly. You've got to show value to members tangibly. And lobbying, in a way, is hard to be tangible. Yeah, you can obviously be very successful with lobbying.
I had a really great meeting with the minister, or with the private secretary or whatever, and
that's important.
But did anything happen?
Has anything come out of it? But here's your monthly or quarterly list of trade sanctions around the world. That's something underwriters can use themselves, and it's valuable. So I'm a great believer in tangible value outputs, and we get a huge amount of engagement with members now, and that always needs to be measured as well. You've got to keep monitoring how successful you are. Who are the members who are not quite engaging as much as you would like? So that's important as well.
And are we going to be seeing you around? No one ever retires properly in insurance, Dave.
I think you mean the Hotel California syndrome, don't you? Yes.
Well, are we going to be on somebody's board, non-executive type positions?
I've done a lot of board work in my time. I've been on the exchanging board for 17 years, just stepped down. I've been on other boards as well. Believe it or not, the ILU still exists.
Oh, I didn't know that, no.
It does still exist because
it's got some liabilities?
Well, one or two insolvent members have, potentially. So there's still a need to administer these guarantees. So I'm on the board of the ILU. That will continue way beyond even a Hotel California syndrome. But I have a couple of ideas of activities I'd like to do. Very much the minority of the week, not the majority of the week. The thought of being on boards I find somewhat more challenging than being more of an ambassador or an advisor with certain companies.
So it sounds like you're going to be free. So if some people have got your number, then they should just interest you in something that's going to be interesting, but you don't want to spend all your days doing it.
I think I've got a good network of contacts that might be useful to companies. The big idea for me, though, for the next 2 to 3 years is I'm quite serious about trying to write a book about my time in the market, how it's changed, various themes, and then why it's still so relevant to the global economies around the world. And despite its challenges, despite perhaps not modernizing as quickly as people would like, if you look at other similar like-minded specialty hubs, London isn't too badly placed.
Yeah. Well, Chris, you've been sorry to keep you so quiet. This will probably be the only time when you're on the podcast where you'll be kept quiet for a while, but I think it was probably right to do it in that order. So, Chris, why don't you just, for any of the listeners out there, why don't you introduce yourself? Obviously, so it sounds like you've been at the IUA for a very long time as well.
Absolutely. Yeah, very much so. Dave and I have different backgrounds, but in some ways we kind of fell into insurance in the same sort of ways. So I was a student. I went to university. I didn't know what to do when I was 18, so I did what everyone else wants to do when they don't want to work. You go to university, potter around. So I did a law degree. I stayed on to do a master's degree. And then I came out of Staffordshire thinking, okay, what am I going to do now? And then I was lured into IUA by the job of a legal researcher. Not knowing anything about insurance, came to the interview thinking I'll never get this job because I know nothing about insurance, and then realised that there's a lot of people who come into the industry not knowing much about insurance, but it's a people industry. So you get on with the right people, you learn your way. And yeah, I've been here at IUA for 20 years, so I've more or less moved through most of our departments. I've strenuously avoided market modernisation, very much legal and reg, and then underwriting and claims for the last 10 years or so. And some of the trends that Dave was talking about, actually, just to go back, I came to IUA right in the middle of that 9/11, more or less. And that was an interesting experience. And obviously, it was a very tragic experience as an incident. But for someone coming into the market, it was incredibly exciting seeing how those market dynamics work with brokers, with really senior underwriters.
And a whole new class of business was being created.
Overnight, yeah. All the AM52 stuff. So that was, I suppose, a snapshot of everything that's kind of good about insurance, how the market can come together, but how everything we do impacts global industry, impacts people. I often, when we do a bit of outreach to schools and colleges, and we pitch it in such ways as to say, you want to go to this event, it needs insurance. You want to buy this on Amazon, it needs insurance. Without any of that, and you pitch it in those ways. And that's the biggest thing, the biggest benefit for me, work for a trade association, is the diversity of everything we do. It's always something different to do. And that's why we pitch it to everyone coming in. They get access to the best people in the market, the smartest people in the market, but also it's a challenging but an enjoyable, diverse environment. And Dave has been a very good boss, so he's kept me around for 20 years.
I like to describe ourselves, Mark, as the extra member of staff for every member company, because we can literally address anything, I think, that affects their business.
But it's interesting, Dave was talking about some of those trends, I suppose, moving a little further away from the lobbying side and bringing the technical excellence. And we've almost moved full circle because that's one of my objectives.
You have to do all three. So, what's top of your list of things to do? Obviously, you can't sit there, like with politics, you can't blame your predecessor for everything because he's sitting in front of you for a start.
There's almost nothing to blame my predecessor for, and unbelievably strong setting we have at IUA. But looking at the 2 or 3 areas where we're looking to evolve, I guess, is the right way of putting it. So Dave mentioned before about underwriting and claims. That's where we have our core relationships with members, 1,300 people on our various groups. We want to bring that as much as we can front and central to what we do. And so we do an awful lot of work on the lobbying league on reg. We do an awful lot of work to make sure the operational efficiencies are there. Super important. But what are we known for in London? It's underwriting and claims expertise. That's where we set ourselves aside apart from other hubs. So we bring that to our focus, and we do a little more, be a bit more visible what we're doing around kind of thought leadership work, having a forum for members to discuss with peers some of the challenges they're seeing now in the softer market conditions, particularly around contract wordings. What do buyers of insurance want? And some of the new tech that we're seeing in new distribution models. So we bring that to the front of our thinking. Second area is looking at talent. Everyone's looking at talent in some way, shape or form. How do we attract? How do we retain? How do we train people coming into the market? To be frank, we haven't done very well as an industry, I would say, or at least it hasn't been a coordinated response. And we're not, as IUA, looking so much at the attract, because there's a lot of entities, particularly the LMG, that we work very closely with and are members of, that do a lot of attract. We're looking here at IUA on retain and train. So that's 0 to 2, 0 to 5 year practitioner experience.
Well, you've made all the effort bringing someone in, and then it's heartbreaking to lose them to another industry, isn't it?
Once you're in the industry, it's a great industry, but you do need, particularly kind of in the hybrid environments that we're working in, you need that network of people. And we've got it's called the IUA Futures. It's an initiative really, so to coordinate all of that across all classes of business with external stakeholders and say, what can we do?
And also, it does get better, doesn't it? Your experience of the insurance industry, I think we'd probably all agree, is that certainly by year 5, you start to really understand it and you can see how it all fits together. Whereas you start off and you think, I don't really know what I'm doing or how does any of this work? And it's only later you start to see how it all connects together and you can start to really enjoy it.
Absolutely.
More.
I mean, there's certainly still multiple acronyms I don't understand and never will, because people just keep creating new ones. And actually the trade association environment's perfect for that, because we see lots of different risks, lots of different classes of business and the sort of drivers, and then look at where we can take any macro trends from that. But yeah, certainly once you're in the industry, it's a great industry to be in, but I think we can do more to get them in and when they're here.
I always think if you're joining the industry, as soon as you can, try and get involved in your relevant trade association somehow. Attend some of the educational events. You'll meet different people. If you're lucky enough, get on one of the committees.
We have a lot of next gen groups now. We do networking breakfasts, we do events, social events, full-on conferences, just targeting that 0 to 5 year.
I've been to all the other specialty hubs multiple times, Mark, and the trade associations in those hubs are very small. They do limited amounts for their members because they've got limited budget. So the ability to coordinate thoughts and activities through the trade association, I think, can be invaluable. It's tangible, again, a tangible benefit for members.
Yes, because there's something on pretty much every lunchtime, isn't there, that you could go and insert, you could get your sandwich and you can go and learn something interesting and something useful.
The other thing, just to change tack slightly, coming into the role that has probably changed over the last year or two, is how we look at risk. We as associations, you quite often just look at it in silos of individual classes. This is happening in marine, this is happening in D&O. And I think we will look to do more on revisit what we mean by risk and how we treat it as a trade association. So, for example, take AI. AI is the most topical macro risk that we're looking at the moment. We need to have association leads who can coordinate across multiple classes of business. What things are you seeing in professional indemnity? Are we seeing AI washing? Are we seeing AI hallucinations? How do policy wordings interact with AI? Do we exclude AI? So having that kind of macro holistic
and also the
view.
structure of how you use AI within your own organization, how vis-a-vis the regulator, you can kind of show what you're doing with it and in what environment you're deploying
Well, the FCA has these sandboxes, don't they, at the moment, these AI sandboxes, and that's very positive. I still think within the insurance market, we're still trying to work out exactly where liability should fall and how the policy approaches. Should it be AI as an addition to traditional policy, or do we have a standalone AI product, a bit like cyber, systemic risk, all of those things? How do you handle claims? And then obviously, if you think about it from insurers themselves, using AI in the placement process, in the claims handling process, and that links right back into talent. Looking at the new generation coming in, what sort of person do you want to be in the industry? Do you need someone with not a traditional underwriter, or it won't be a traditional underwriter anymore? You'll need someone with be able to work with AI or augmented AI, and how that process works. What sorts of people do we need in the future?
There's so much going on because, of course, it's still embedded in all the risks themselves, particularly the liability risks, one presumes.
Hard to exclude.
And it's currently silent. Yeah, it's sitting there, but we're not quite sure where it's going to manifest itself. We'll probably be certain that it will manifest itself.
Oh, it's in everything. We were looking at a couple of cases in the professional indemnity market where there's been AI hallucinations, a case citation. A lawyer's used an AI product to develop cases or looking for precedent cases, and the AI is just frankly made them up. It's hallucinated. Now, to my mind, if I'm buying professional indemnity insurance or if I'm a third party making a claim, it shouldn't matter to me whether the lawyers used AI or they've done the search themselves, or negligence is negligence. There may well be subrogation rights at some point, but I think we need to look at something like AI from what the buyer wants. If AI has been used in pretty much every process that we're all involved in, it's very hard to totally exclude that. Now, you can manage your liabilities, but hard to totally exclude.
If it's part of life, it's just life, isn't it? It's going to have to be covered in one way or another. Hopefully it will do as many good things as bad things, and hopefully it will help in risk management hugely as well. And probably one would hope that AI is going to stop more bad accidents happening than it creates.
Well, I mean, it's an interesting point that if you think about human failure and AI failure, and you think about it in terms of something like driverless cars, in a human, you would accept a certain level of failure, say 2% failure rate.
Distracted driving,
Yeah, exactly. But would you ever accept that in an AI? And then should there be?
Well, at least we know the AI is not distracted.
Exactly. But then you have algorithmic bias and things like that. So there needs to be a review of how AI works and what its potential liabilities are.
We're going to be looking forward to that from you. Sounds like we should be expecting quite a lot of publications, that kind of thing, or some of the
we're working with some of our external stakeholders. We want to do a piece of work with AMIC. We were at the AMIC conference a month or so ago and looking at if we can do something with them on emerging risk. And certainly we have really strong relationships with some of the big consultancies.
What about the current regulatory environment in the UK, for example? We've had a new government, been in place for over a year now. We've had some advancement in terms of having that mindfulness of the competitive nature of the insurance market, that the regulators had to bear that in mind. At least it was only a secondary requirement, wasn't it? But now we've got a government that's been openly talking about trying to drive greater growth in the economy and trying to sweep away things that are getting in the way of that growth. Certainly those are the words. Have you seen any kind of evidence of that more positive environment manifesting itself?
I think it's kind of embryonic stage at the moment. So the principles are there. They're great. I would say we're seeing a little more scrutiny of the regulators, certainly. So we saw the House of Lords Committee report a week or two ago, and we've seen some really positive noises, around captives, for example. We're expecting announcements around some sort of proportionate regime for captives in the UK. And I think certainly when we talk to FCA and PRA, we see their focus on growth and competitiveness of London as something that comes through in our day-to-day discussions with them. And that definitely wasn't the case 2-3 years ago, I would say. I suppose the challenge from a governmental point of view is that these things take time. Quite often it takes resource, and we're obviously in challenging economic times. But I think overall the direction of travel is really positive.
To my mind, this is one of the great successes of LMG.
Yes.
Where the LMG at a true cross-market level has by definition relatively few things it can do that everyone's on the same side of. But seeing London with more regulatory efficiency and more attractive for new capital and new business, a number of those initiatives, as Chris has just said, are starting to bear fruit. It's great because I can remember not that long ago where you'd hear a company say, yeah, we looked at London, but in the end, it just was taking too long, lack of response from key regulatory interfaces. We went somewhere else. And that was a loss to London. They've come back to London as a branch, for example. So, yes, I think there's great signs ahead there, hopefully. And certainly this government needs growth in all areas. And the city is one of the main sources of tax take and general economic input for the government.
Yeah, and certainly that rebooted London Market Group, LMG, and obviously I've had Caroline Wagstaff on the podcast a couple of times, seems to have been successful. And obviously your relationship is where LMG is carrying things where the whole of the London market can agree.
It's where carriers and brokers can agree.
Yes.
Which is key.
Yes.
Which is not always easy to find areas.
So yes, those lowest common denominator issues that you can all agree on, then you make sure that the LMG does that because you're more likely to get success, I suppose, once you're seen as a united front. That has been a success, hasn't it? Because it's probably been a 15-year process of that reboot. It was probably at a conference when Steve Hearn almost kind of gave himself that first job. It's not that the LMG already existed, but it hadn't really existed in that form. And he said the London market needs to speak with one voice. And I think a lot of people in the audience after that went up and said, right, well, you're going to be the voice then. You're going to do the work.
That was the call to arms speech, wasn't it? Yeah. But go back in 2001, it was the Tim, Carol and Max Taylor show.
Yes.
The IUA Lloyd's Forum, it was called then.
Yes.
So
I think Caroline coming in she's give it a bit more definition. She's taken those 2 or 3 target areas, so some of the regulatory
things that overlap with some things you're doing,
the government things, and then obviously the talent as well. They're doing quite a lot.
That's been really, really good. Long may it continue, and that this
Absolutely.
becomes an institution that keeps that energy going. And again, because it's quite a big stick with which to beat the government. I'd say, well, with one of the biggest employers in the city, we're a huge percentage of London's GDP, and it's hard for a minister to ignore that, isn't it?
One of the big inputs we give to that work is measuring the London company market.
Yeah.
The size of it, even defining it, which is not easy.
Yes, because your report, it comes out every year or every couple of years. It's the business controlled by London, which is slightly different.
Yeah. Lloyd's is very easy to measure, clearly, because it's all within Lloyd's. And with relative ease, you can measure certainly UK life and UK motor and house, etc. market. But once you get into the commercial space, wholesale, reinsurance, clearly London market, marine aviation transport, London market. But then the P&C clients that are written on a co-insurance basis, yes, London market. But a lot of it's written single insurer.
Yeah.
Especially if you're a UK SME, for example, or a bit bigger. But it's written in London market form. And that's where we've tried to solve this grey area of what is the London market. Because it's UK, but it's written in a London form. And you look at cover holder business and the growth of MGAs, that's pure London market in terms of the way it's written, but mainly the risks are retail. So it's become a bit of an art rather than a science measuring the London company market. But we've maintained the consistency and we're now approaching 50 billion in premium.
And certainly, again, having that and then combining that with the LMG London Matters reports.
Well, combine it with the Lloyd's number, you get the size of London, which then starts to resonate in the halls of Westminster.
When the LMG combines the whole thing together, then it really becomes quite a big stick with which to beat the government, which is quite helpful. So that was very good work done over the last 20 years, because I know how hard it is. As a journalist, you've grown every time you try and do that compilation. I think, data journalism has really grown and become much more efficient than ever used to be. It's much easier to pull up a list. I remember
the one thing we can't do, sadly, and probably never will, is the combined ratio of the company market.
It's too hard.
Don't know it. We don't get the claims data, so you can't
get
do it.
You can get something from PRA returns, I suppose, but not much. You can't get it that specific.
But even then, how much of it is London market?
Yeah.
Almost impossible.
What about closer to home, London on the technical side, on the market reform side? Blueprint 2, it's been a difficult process. It's been stalled and delayed a few times and reset. Do you think it's been reset now for the final time and that you'll think it's on track for delivery?
I mean, Chris might appreciate me taking this first. I genuinely
You've
hope,
been there at its inception.
well, not quite its inception, but
Pre-inception.
it's pretty close to it. Well, yeah, you could say I came to London in 1988 just as they were introducing the claims management system. So yes, the beginning of ECF as we now know it. I truly hope the reset of the reset is going to be the final reset, honestly do. Because having sat on the Velenetic board for all those years, I've seen the ups and downs of market modernisation. I've seen initiatives succeed. I've seen initiatives fail. And there's been all sorts of reasons why it goes one way or the other. But in this environment in which we now sit, and I'm not an expert in program management, far from it, but the levels of governance, the levels of market engagement, the levels of professionalism applied to all aspects of the blueprint, one has to be perhaps as confident as you could be that sometime next year we will get phase 1 over the line, and that will be the bedrock upon which all the other digital facilities and capabilities can be made.
Yeah.
I genuinely do believe that. I was confident about it before, and then that confidence was drained from me for various events in the past, 12 to 20 months, say. But now I'm back in that glass half full space.
Well, it's good to hear. But also, let's say 30 years ago, some of these reforms we could have said, we know that there are at least 2 people in this room who are kind of actively trying to sabotage it. I didn't certainly ever had those vibrations in the last 5 to 10 years where we certainly felt that the market was almost impatiently pulling towards getting this over the line because everybody wants it to happen. I would say I can't see anybody who doesn't want it to happen.
I'm not sure back in those days everybody wanted it to happen.
I agree, yes.
Yeah, I think you had your pioneers who wanted it to happen in their own company especially, and perhaps it could happen at a market level.
And to create a market barrier to entry for everyone else.
Well, perhaps, but I mean, there were coalitions that were trying to do that in the past, I suppose. But London's at its best when it's working together, and the economies of scale of digital processing through a central bureau like Velenetic are huge. They still prevail. They do not exist in other markets. I can tell you categorically, London is streets ahead of many markets.
No, I worked for a couple of years in Madrid, and just reconciling our accounts was exhausting and, very expensive process.
I find it frustrating. I understand why we, in a way, say we're rubbish, but we're really not as bad as people think when you compare it to other like-minded markets.
Again, sometimes we underestimate just how much work it is.
It's hugely complex, hugely. But the work of Velenetic, it processes millions of transactions, billions in premium throughout the year. Break it down per day. There's a daily settlement between an insurer and broker every day. So it's hugely complex. It needed a lot more planning, as we know in hindsight. But as I say, I do feel more confident that next year is going to be the breakthrough year.
I mean, my take on it as someone, as I said before, is kind of strenuously stuck to the underwriting claims and legal and reg side of things and not the market mod. But my reflection coming in is having resets of resets is never a good sign from an optics point of view. But some of the people I've met who are heading up this now and are responsible for delivering this change are just some of the smartest people I've met in the market. And there's a huge amount of challenge still, but no one's putting deadlines that are not achievable. They were kind of taking it step by step. And I think sometimes if you put unrealistic deadlines on things, it just, people are looking from the outside in, you lose confidence in the process. So
you can kill it. You can kill it, but you can also kill it by having too long a deadline.
Well, yeah. I think it is a realism to it now that we need to get things done. And I think the right people are in charge of it now doing that. So I'm much more confident. As I say, I've not been directly involved previously. I'm much more confident just working with the people who are in charge that we can get that done.
I think the hope here, Mark, is that what is going to be delivered next year will survive the test of time because you can build on it with more modern capabilities. So it's fixing the internal architecture of Velenetic primarily to make it capable for digital
Hopefully
processing.
It makes it easier, more modular, easier to fix as you go along.
Exactly.
Because, of course, it's never going to be once and done.
Not everything goes through Velenetic in this market. So there are, especially on our side of the fence, there are carriers out there working with brokers already for digital processing. That's in the market already, clearly. But this is all about the economies of scale where you've got multiple insurers on the same risk.
So once we get all this digital infrastructure, would it be obvious that the data should be flowing through common standards? And would you agree that that must be a core? You've signed up to some initiative on this. How essential is that? And should it become mandatory that everything flows through on those global accord standards?
That initiative was after my time, so to speak, but only last month.
Did you sign up, did you, Chris?
Yeah, absolutely. Common data standards, and that was launched with all the associations last month. With a jigsaw in Lloyd's, which was an interesting thing for my first couple of weeks in the job. I didn't think I'd be doing a jigsaw, but nonetheless, it was a good analogy of the market working together to promote common standards. Mandating, we don't, certainly in the company market, certainly as IUA, we never mandate anything to anybody, but one would hope that the obvious benefits of using common data standards, using accord standards, is the way forward. It's a natural way.
It's evolving to be much more commonly used by all parties. Definitely evolved. You've probably heard of Rushlicon?
Yeah, absolutely.
So Rushlicon through Accord, and then is the Accord standard we're talking about here for large commercial business. They have a good track record now of bilateral peer-to-peer exchange of an Accord data standard. That also happens in London in many, many, many examples. It's just doing it through the centre will encourage it to happen massively. It's a bit like when the MRC came in, the market reform contract used to be called a slip. No one says slip anymore, really, now. They say MRC. So it's become the standard, certainly for what you might call pure London market business.
Once you've built that infrastructure and people start using it, then it becomes obvious that instead of sending 5 attachments to an email or an attachment through PPL or one of those placing systems, you much want it just to send something that is a fully populated message.
And also, logically, if everyone's using the same base standards, it's easy then to evolve other products.
And I suppose, if you're the broker doing it the old way, you might notice that it takes the underwriter 2 or 3 days to get back to you, whereas in fact, if you do it the new way, they could be back to you within half an hour.
If everyone sees efficiencies, people will use it.
Yes, but rather than mandating it, you're saying it'll be blindingly obvious that it's better that way, so everyone will start doing it that way because they'll be better brokers.
It's always preferable to make the argument rather than tell someone to do something.
When they can work it out for themselves, and they'll just do it and say, well, haven't we already got this?
And if it doesn't work as expected, people won't use it. That's the core message.
Do you think there's any peculiarities of the London market? Sometimes it sounds like we're making excuses for ourselves. Do you think there are any peculiarities of the London market that do make it difficult to get these things done?
Well, London's unique in many ways. So there's bound to be, people talk of Londonisms, don't they?
Yeah.
Obviously, to get things through Lloyd's is specific to Lloyd's. So that is a Lloydsism that needs to be catered for. One of the things that I think London does struggle with, and I was speaking to one of our member CEOs a couple of weeks ago, and he kindly took me to lunch for my retirement, which is very nice of him. We were talking about how the blueprint might manifest itself. And he said, one of the things we struggle with, and this is one of our biggest members, big member, is getting investment for digital activities within London, competing with other aspects of the group. It may end up, London puts a great bid in, but the money goes to Asia for motor business, because that's got the bigger growth potential to the group. I think that's one of the challenges London players have. So the bigger ones have to compete within the group. The smaller ones have to find the money from somewhere. So really what we need is ways in which you can benefit from digital capabilities, not necessarily by being ready yourself immediately. So you get into sort of translator services there and AI again, which can help create that structured message from unstructured data without that much upfront investment yourself in the first instance. Eventually you will have to get the benefits, but that can be one of the problems for London.
I suppose, yes, but if you did all the digital investment here, you could be writing that Asian motor actually here. You could be.
Possibly, yes, indeed. Well, you're getting into the whole growth of the hubs here and how that's competing with London.
Well, again, look into the future. Well, it's already here. In the last 5 years, we've had Tracker, Fast Follow, lots of cross-portfolio broker facilities emerging, they'd already been around, but really emerging and becoming almost a standard that any broker of a certain size has some kind of facility. And also there are very specific underwriters designed to be follow-only, fast follow, portfolio-style underwriting businesses. How do you think that's going to change the London market? And where do you think it'll end in terms of a balance? particularly for start with things like lead follow? Do you think it'll be about 50-50 or, I don't know, 70-30?
We're looking quite a lot of lead follow at the moment, just in terms of how things like GUAs work and for contract changes. And
that's a general underwriting agreement.
That's another acronym.
It's just a bit of admin whereby it makes it easier for someone with a slip with 20 people on it.
If a contract changes, how is it affected, essentially, whether it's
and how do you have to tell the leader only or the first two or that kind of thing?
One of the interesting, just going to the trackers and follow with it, I was talking to a reinsurer the other day, and one of their points, and I hadn't appreciated this, was that it's a big competition for them, because where they would normally see open market follows taking a larger share than reinsuring it, there's far less reinsurance into the traditional market with these the tracker follows. So to my mind, it's an obvious efficiency that we can see. And as you said, Mark, probably 8 of the top 10 biggest brokers have got these entities in place already. So it's not like they're new, they're here.
Would you see it's a net positive in that it could be accretive, because obviously those brokers are now freed up to spend more time with clients, win more business?
Certainly on the specialist stuff that Linden excels in, yeah, absolutely.
So another company I was talking to won't touch them. They don't trust the algorithm. What is their loss ratio compared to more traditional underwriting focused activities? Although there'll be a balance between the two here, well, I'm sure, as there has been in the past between when facilities came in versus open market. I mean, I remember when Blueprint 1 was published, Lloyd's had done an analysis of the breakdown of the types of business in their market, and open market was, I don't know, say 25% of the total book.
It wasn't that big.
Yeah, so if you'd done that 15 years ago, it was probably way over 50%. So there's much more science behind underwriting now.
And algorithmic underwriting, it's not going away. It's going to be used more and more. So however that manifests itself is something we need to work with.
We've already spoken a bit about AI, but what about AI in terms of at an IUA level? What do you think the best use cases have been for AI?
Do you mean in terms of
in terms of using it yourself for your own business? Because most people would say it's great, we're using it for the unstructured data becoming structured, ingesting lots of incoming business from brokers, putting it into the system, sometimes being able to run it through the pricing engine, putting it through the model and everything, and having it all ready for an underwriter to sort of hit the button on send that quote out or bind that business.
Yeah, I mean, we see it used a lot in kind of risk management and risk assessment process. One of the things that we're interested in is how we can use AI for contract check-in, contract building. We've all got these. IUA have got them. Lloyd's have got one. The Bureau have got on these wordings repositories with thousands of wordings in there. They're all in really unstructured sort of Word documents. Can we use AI commonly usable whether it's in a placing platform or it's in some other platform where you can have access to those clauses, you can build it, you can work with clients to build those bespoke contracts. So that's an ideal case of bringing all different things together to have one product that we can then use to have more contract clarity and certainty with going right about the contract.
An automatic wordings builder will say, well, here's the widest possible version of that wording, here's the narrowest one, here's the one you want to avoid.
We have meetings with EMIC, for example, where we'll talk about different contract variations. If I want an AI with a certain level of deductible or some sort of exclusion in place, limited exclusion, how do we build that compared to something that gives full cover? It can't be beyond the market if we're writing complex bespoke risks, why can't we have those variations of approaches
sounds
to
like
do it?
Any insurtech out there working on these kind of things sounds like there's a job there.
There are plenty doing it.
And the placing platforms are looking at that as well, contract builders.
Do you think there's any deployment of AI at your level, at the IUA level, for example, writing those reports and trying to define what's London controlled and what isn't?
At the most basic level, we have a lot of committee meetings, and we now have processes in place to record, transcribe, make us all look good. When
you can get it to summarize the main bullet points of what everyone agreed to and who's going to do what.
Absolutely. There is a balance to be played, because we can also use it for things like looking at consultation papers and summarizing consultation papers. We have to be a little careful, because new people coming into the market, you need to learn quite often by reading complex documents and knowing what to look for and things. So if the AI is doing it for you, there's a training element that we need to think about there. But in general, we can make quite a lot of savings through use of AI just for basic admin tasks. And that, in parallel to how the market will use it, it allows me or anyone in our office to concentrate on the more difficult stuff, the more member face-to-face engagement that we have, and they don't need to worry so much about the admin. So that's where we can build it in.
Absolutely. One last thing would be, another thing that's going on in the London market is this question of non-financial misconduct. And there were some consultations out and different things. How do you think we should be proceeding? I was remarking before we started recording, this is the sort of thing where 30 years ago, there used to be sort of disciplinary hearings, but they're all published and public because it was really just about what was being done. It was what kind of behavior in terms of like what business were you doing that you shouldn't be doing, or the way that you were conducting business that you shouldn't be doing. You couldn't be writing net business or writing tonner policies or that kind of thing. And then every compliance officer, they were all public. And you could put them in your compliance manual, make sure everyone had read it and understood that they can't do that anymore, and then you could move on. These days, everything's so much more complicated because it's about the way that people behave to each other more than what they actually do.
It's the non-financial rather than the financial.
Yes.
Yeah, I know, absolutely. And we, as IUA, are working, actually, funnily enough, we're working with LMA, with LIBA, and with FCA, actually, on putting in place a program to inform our members, inform board members particularly on some of their responsibilities. Essentially, we're in a people industry, and people coming into the market, particularly the new people coming into the market, need to understand that there are processes in place to call out misconduct, and that there are consequences if someone commits that misconduct, and there are regulatory consequences also. So I think some of it is previously, it's very much behind closed doors, and it doesn't mean that conduct wasn't being dealt with. It's just not particularly visible. And I think now...
certainly it's harder for it to be seen to be done.
Exactly. Every element of non-financial misconduct should be dealt with by companies themselves, by their boards, and by, if needed, the regulator. But we need to be looking, particularly if people coming into the industry, look at culture quite a lot. I'm finding this out probably something that I didn't do when I came into the market, and probably Dave's the same. It just wasn't on our agenda then, but definitely people coming in now, they want to see that companies have a culture in place, they have a way of working, and it's an industry they want to be in. So having that visibility around processes, around non-financial misconduct is absolutely essential. And frankly, the FCA are doing the right thing and making it front and central to what they're doing.
So you can help the members. If a member came to you saying, have I got my structure right, or do you think I'm
well, we provide training around that. We also have our own legally approved conduct rules, and we build those into everything that we do. We have our values. This is not just signposting. It's something that we believe in, but frankly, the people coming into the market need to see it. They want to see it. We get asked, when we do interviews, people ask us about it. What is your policy around this? What is the culture? How does it? And that's what they want to invest in when they come into the industry.
So you think that's just the way it's going to be, that things are going to be much more transparent in that sense as time passes?
Absolutely.
Well, thanks so much for both of your time.
Thank you, Mark. It's been a pleasure.
Thank you, Mark.
It's been a pleasure.
Thank you. Well, I hope you enjoyed today's episode. If you did, don't forget to subscribe or leave a like or a review or recommendation on whatever podcast platform you used to access this program. These really help get the word out. Before we go, just a quick reminder that advertising slots are available here and in other places in the Voice of Insurance podcasts. Podcasting is the fastest growing medium and attracts a high quality audience of key decision makers. It's also an intimate medium where you, the listener, are right in the room with me and the interview subjects. Needless to say, that means it's a great way of getting your message out directly to an audience because you know you've got their full attention. It's also very cost effective. So get in touch with Mark at thevoiceofinsurance.com to find out how you could be speaking directly to the industry. The Voice of Insurance podcast is produced in association with Advantage Go, enabling enterprise-scale underwriting through a single pane of glass. Voice of Insurance is produced by me, Mark Gagan. Music was written by Anna Gagan and produced by Carlos Gagan. Check out more podcasts and written comment pieces at www.thevoiceofinsurance.com.